And good morning, everyone. Welcome back to Neely FX. My name is Michael Neely, and this is the channel where I talk about foreign exchange trading, and prop firm trading, and the like, and doing stuff like that, and making money at it, hopefully, because it is not a guarantee that you're going to make money in these markets. Even though a lot of people online do make it look easy, it is not easy at all. It does require great deal of self-discipline and patience. So with that, let's get into the risk disclaimer screen and see what we've got going on here. Since I'm in the United States, it's important that I say this because I think it's required by law where I live. But at any rate, we're going to go ahead and do this. See, this channel is for educational and entertainment purposes only and does not constitute trading or financial advice. I'm a professional trader, not a broker, trading my own capital. I do not solicit funds, manage client accounts, nor do I hold CFTC or NFA registration. Forex trading is highly speculative with a high risk of losing some or all of your investment capital. Only trade with funds you can comfortably afford to lose. And also, here's the CFTC risk disclosure. Goes something like this. Forex trading carries a high degree of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before trading Forex, consider your investment objectives, experience, and risk appetite. You could sustain a loss of some or all of your investment capital. And we're also going to talk about some commodities too, like the metals, gold, silver, oil, stuff like that. Oil's not a silver; it's energy play on in the commodity sector. But we're also going to talk about that too, and possibly getting into futures a little bit later on in the year, getting into commodities futures. I'm a former Series 3 broker back in the day when we used to pick up the telephone and call people and stuff like that. And well, I had to weave that into my script every time because it's required by law, because a lot of people have gotten burned in these markets, especially in the early days where nobody knew what futures were. And they ended up getting into a futures trade. And futures leverages money that you don't have. So that's why if you're going to trade the futures markets, trade them carefully because you could end up losing more than you've got. But we're not going to talk about that. We're going to talk about what's coming up this next week in Forex. I also trade the Forex spot market, which is you can only trade the money that you have in, and also haven't delved into futures yet, but I am interested in it. At any rate, let's look at the what else is going on here. We have pharmacy minutes on Tuesday coming out. So we've got, let's review our news, the new risk events as they're called, or news. Unemployment claims on Wednesday. Oh yeah, because it's a holiday on Thursday. We have New Year's Day. I don't expect a whole lot going on this week. I do expect silver and gold, the metals, to run because those are being driven mainly by the Chinese markets. So we'll see what happens with that. But in the meantime, let's go ahead and take a look at the DXY. We're going to back out to the weekly channel, the weekly a little bit, and see what's going on here so we get a better idea of what's going on fundamentally, or not fundamentally, but from a technical basis. So we have the DXY basically range bound since April of 2025. Right here. So look at this. Look at how clean these lines are. Bounces off of support here, goes higher, crashes down to here to find support a little bit lower at this level. Yeah, 2 weekly closes of support on that level, so that's another key support level. Should put that in there. Right there. I'll draw a horizontal line, and we'll call it key support level. Support June 25. So we'll call it that. Now it's important to take a look at these levels because they tend to replay themselves. It's not magical or anything. It's just the way just the way things work. That's support to the left. Okay. Yeah, that sounds good. For some reason, I don't see those words anywhere, but they'll show up in a minute, maybe. Because, let's see. So we're still way above support here, and it's still kind of in the middle of the zone here. So we're looking for more downside to possibly coming down to 97, touching the support level at 97.66, and then possibly taking off again. Possibly. We don't know what's going to happen. We can only put our mere guesses in. Best guesses and work with that. Let's see. As far as news goes, shows weekly decline as fundamentals remain weak. Okay. So we are, and again, I take news with the grain of salt too, because a lot of times I see that do the exact opposite of what the news says. So it is a zero-sum game, and it's like sometimes the news kind of pulls in the wrong trade, so the bigger fish can gobble up the smaller guys, and that's just the way life works sometimes. It's about power. It's about everything else. So here we are at the weekly top right here. That is an interesting weekly top at 1772. It hasn't really broken that in a long time. So I'm going to put another horizontal line in there for resistance. Since again July 2025. It's 1772 is still a mark to beat on that. Middle left. That. So there it is. Okay, I can find it there. Okay, that's good too. Let's see. So the euro versus the dollar is still trying to beat 118. If it breaks 118 and get a weekly close on that, we may see a push higher. But right now, that is looking like a triple top. We'll see what happens when it opens Monday. But triple tops are usually a period of exhaustion. Then again, no, that's a starting to look like a triple top. Triple top periods of exhaustion. We look for weaker things going there. However, it is not something that is ironclad. Anything could change it. Could change it over the period of time. That's what it looks like on the weekly top. We could be looking for some daily close over 118. Pardon me, a weekly close over 118 to make it look like it's going anywhere. And that's what it looks like on the daily level. Daily is looking like it's starting to get some exhaustion here at basically 118 proper. 1796. We did have some daily push over, but we still haven't gotten a weekly close over that. So over 118. So without a weekly close, I don't see it breaking that anytime soon. Maybe this is the week to do it. Who knows? And again, it's important to trade what you see in Forex, not trade what you think is going to happen, because what you think is going to happen generally isn't. Life just generally does not work out that way. This is Henry, the Forex trading parakeet, who's also helping me. So he's very excited about some things. I think he wants to challenge my views on some things. That's fine. 157.81 is the weekly high on that. On the dollar versus the yen, it doesn't look like it's going anywhere after that. So I'm going to put another one right there. I like this weekly close perspective on things. Since around, going all the way back to March 2024. So we're still looking for a weekly close over Henry. Henry likes to play on the keyboard, so I type. MACD is still showing a lot of strong bullish activity. So although this does kind of seem like it's tapering, these two lines cross it, so we're going to get a downward move. We're coming off of resistance. We're coming off of RSI's coming off of oversold, coming down to 65. So that might be an area to kind of get in right now at the 156.5, somewhere in that area. Daily area. On the daily, we're going to look at trend lines are still also holding, so I'm not really playing a role in that. 4-hour resistance trend line does not holding. As soon as I said that, I knew something like that would happen. And this is which trend line is this? Monthly resistance trend line. So it's breaking the monthly resistance trend line. How about that? Broke that back in November of 2025. And I'm not going to say it hasn't looked back, but we are seeing a new, could be a forming a triangle, a bullish type triangle, an ascending triangle. Forms an ascending triangle. We are going to be looking for more bullish activity on the dollar versus the yen. Let's go to the pound versus the dollar. Go back to weekly real quick and see what we've got going on here. And again, weekly, we're looking at a lot of stuff. These charts are getting awfully messy too. That's what's weird about it. So they get awfully messy. And again, looks like the weekly close high. Looks like we've got some room to move. It's 135.6, so we could see some more bullish activity on the pound versus the yen. If we have a weaker dollar, then that's going to be the way to go on that, is trade the pound versus the yen. It's a lot cleaner than the euro versus the yen. Although euro versus the yen is right at resistance right now, weekly resistance. I'm not sure that I would play that one. And the pound versus the yen, pardon me, pound versus the dollar right here. I think it's got room to move. Again, if we have continued dollar weakness, if we have dollar strength, it's got a long way down to go. Could come down to about 129.44. More realistically, or a closer stop would be about here, 139, 130.95, 131 proper, basically. So about 300 pips down on the downside there. Pound versus the yen weekly. It's on a tear. I mean, just can't really argue with that at all. I can't really draw a monthly resistance, a weekly resistance trend line yet because it's still moving. Showing some signs of exhaustion, but that doesn't mean a whole lot on the weekly chart with the pound versus the yen. Could go higher. Lots of blue candles in there. I've got blue indicating bullish because I've got a green background, and the green background just makes it look like a gray space. So we'll go down to the dollar, the year, pardon me, the daily, and we have bullish engulfing candle right there, and stopping basically a weekly close right at support, right at resistance at 211.40. So I'd come in around 211.56, 211.60 on that to see if that's going to hold. Euro versus the pound. Pardon me, euro versus the yen. I don't do euro versus the pound. It's just confusing to me. I like the way it's holding up inside these Bollinger Bands. Nice steady move. I know James Stanley, this has been a favorite of his for quite some time. 50, way above the 50 period single moving average. That's the 200 moving average right there. It's doing great. The 20 period moving average is right there. It's just not showing any signs of slowing down on the daily. On the weekly, well, hold the press, because that is a looks like a reversal candle to me. Looks like bulls are slowing down on the euro versus the yen, but we will see. Come to later on tonight. Dollar versus the Canadian. I don't know what to make of this. It just broke weekly support, partly the monthly support trend line this past week, and is heading further south. So we'll see if it can find some support around 135.78. If not, it looks like we've got a clean 100 pip drop to the 135.78 level. That's, again, if all things were perfect, that's what it would look like. And we've got a cross on the MACD right here 2 weeks ago on the weekly, and RSI coming down. So that looks very attractive. Shorting the dollar versus the Canadian right now. That looks very, very nice. Again, we'll see how it sets up for the new year. Lots of things can change during the new year, but that doesn't look like one of them. Again, you want to pick your entries on the 4-hour chart and go that way. That's why I'm doing it. Let's get the major trend on the weekly charts, and then refine it on the daily charts. Get confirmation. Oops, stop it. Daily chart here, and it's looking like a doji, but it's not. It's not a doji. Just look at these. It's not necessarily a doji. That's just weak volume. So that could go further south. Again, I would want to come in. That's too far. Maybe not. Because the previous candle's what I'd be looking at. So 136.59. Maybe. Maybe. That's... I don't like psychological numbers like 75s. When I see a lot of closes at 75s, 25s, and 50s, I tend to avoid those, and zeros. I tend to avoid those. I try to come in around 63s and 43s and 42s and stuff like that. You know, it's just it depends on how you want to trade. Canadian versus the yen. Look at that. Up, up, and away is the Canadian versus the yen. And we've got an all-time high back here, all-time weekly high right here, 119.02 back in July of 24. And again, July of 24, we've got 118.80, so 400 pips to move between now and then. So that's looking like a nice bullish run right there. I would continue trading that with strong Canadian dollar versus the yen. And with talking about the Canadian versus the yen, let's talk about oil. Canada is a major oil exporter. Japan is a major oil importer. And right now we have I don't know what to make of that. That's looked like a reversal candle right here on the weekly level. So we could have a reversal in oil at 56.75. We got strong long-term support at 55.10. So it's not going to go too much further south than that. If it does, we're going to have a collapse in the oil industry, possibly, because it's got a long way to go before it hits anything on the weekly level. It might be going all the way back to the crash of 2020, yeah, during the quote-unquote days of COVID. Still get mad thinking about all that, but we're not going to talk about that. Because I don't see anybody putting on masks anytime soon. Let's see. So the oil market is still flat, just sitting here right at about 56. However, the Canadian versus the yen is taken off. I think that's more so due to a collapse of the yen. Things do not look good for Japan right now. They are sitting on a. Let's come up to trading economics and Japan debt to GDP ratio. Let's see if we can find it in here. No, it's in this. Oh, really? Nowhere. Can't find it anywhere, huh? Well, find it here. So, debt versus GDP. They're sitting at 236% of their debt. Japan's debt is 236% of GDP. That just makes me cringe. That spells bankruptcy. Going to have some real fun. Compare to the United States. We're way down here at only 124% of GDP, which is also spells bankruptcy. So Japan is going broke a lot faster than we are, and I think that's what this is. It's just a race to the bottom to see who can go broke the fastest, which is kind of dumb. But you know, that's the way that the elected officials have done things in the United States and Japan for quite some time. Is taking this thing called monetary. What is it? Monetary, good, that one in a minute. Modern monetary theory, which states that companies or countries cannot go bankrupt because they have an unlimited check writing ability. Well, that's false, because the taxpayers, in theory, are who fund the government, and the government of the United States, money printing or leveraging the Fed has been the main reason that the U.S. government has been able to stay afloat over creating more debt. Now, people always say, well, who's this debt to? This all debt is fictional. No, it's not fictional. It's in the bond market, and if the bond market collapses, then you're going to have an equity market collapse also, which has a lot of money is tied into that too. How does that all work exactly? I'm not 100% sure, but I do know that if the bond market collapses, equities are coming down really quickly. And that means the funding for all the companies in the world. That's a broad brush look at it, but enough of that. Let's move on. Aussie versus the yen. Look at that. Aussie broke out on the weekly level, broke out of this range where it's been for a while. There's a trade outside. Weather forecast for today? Trains. And then we have this level here. So it's been in quite a range for quite some time. We have a weekly close over 66.6 by about 50 pips. So we could see this could run some more. So the Aussie versus the dollar is finally something I would want to trade on a breakout level. I like trading breakouts. Speaking of breakouts, let's look at this. Gold. And look at it go. Gold closed, finally got a new record high here at 45.50. Is the new record high for the gold spot market, according to Forex.com. That's not going to slow down anytime soon because of what I said about the debt to GDP ratios of the various countries, and a lot of people losing faith in the currencies. We'll take a quick look at Bitcoin and see where it is today too, because I'm hearing a lot of negative things about Bitcoin, and it is right here. I don't like Bitcoin. I've never traded Bitcoin. I'm not going to trade Bitcoin except shorting it, because I do not believe that this is a viable current method of currency. It's basically a bunch of zeros and ones, and those can be erased very quickly, or if you lose your hard drive, then you've just lost all your money. Which does not make it compatible for anything. Also, the electrical drive that it takes is going to does not allow it to become a transactional, like substituting Bitcoin transactions or blockchain transactions in Visa or credit card or bank transactions. Doesn't work because the computational and electrical power required to make one transaction is far less than just the way it's being done right now. And I'm not 100% on that, but I do know that the electrical and power of that is not going to make Bitcoin a long-term viable product. Right now, it's just a bunch of people screaming about it on social media. Platinum. Let's look at platinum. Wow. Look at that weekly chart. Let's see. Let's draw a... So that's what the trend line would look like. Toasted that a couple of weeks ago. So it's up bigly. Hugely, in fact. Up 10% on the week, on the day. That's a 10% candle for the previous week. That's more than that. That's a 22% increase in 1 week. So, if you like making money, platinum's the place to put it. Platinum futures. You go there, or options on platinum contracts. It doesn't look like it's going to slow down anytime soon. In fact, that's the weirdest MACD I've ever seen in my life. Is that one. Well, let's see if we can get silver to top it. Yep, look at that. Silver's totally overbought. At, what is it, 90, is it across 90 yet? Yeah, 91.28 on the RSI. $4.25 average true range last week. That is just insane. And that MACD is phenomenal. It's going to take a lot to slow this trade down. Now, I also want to talk about the fundamentals. I've included a video at the end of this video. I've included a link to a video that you may want to watch to get the total scoop on what's going on with China. But apparently the Shanghai silver price is what's driving it. So Shanghai China's the second largest producer of silver in the world. Right, Henry? Come here, Henry. Here, let's see what everybody. Come on. Ow. Okay. At any rate, so the difference is there's a premium between the Shanghai and the New York Comex. New York Comex is at $74, is where it was on the 25th. It surged to $79, as you can see right over here, $79.33. So it closed this gap a little bit. We're still looking at $82 silver in Shanghai. We'll see how that opens up later on tonight around probably around 7 o'clock. 8 o'clock Eastern time. We'll see where the Shanghai Open is. And this is goldsilver.ai. This is a new website that keeps track of these things. So that might be something to take a look at. but Clive Thompson talks about the disparity between the open interest in futures contracts and the supply of physical silver. And the problem with that is that lately a lot of manufacturers are starting to call their silver, starting to ask for delivery of silver on their futures contracts, and there's not much silver to back that. I imagine the same thing is happening with platinum, because it's also can be used in electronics, as well as some other things. And a US Navy hat to make him go away. But that's what's driving the silver market. Lots of demand, no supply equals huge pricing opportunity. So we're going to keep an eye on that. Also, we don't have currency strength meter yet because it's not opening. And what do I look like on this? We have a phenomenal time. I'm up 6%. Need to hit 10% to make this, to pass the first challenge, and then I get into the second challenge where I have to hit 5%. And if I keep these numbers straight to the next challenge, then I'll have a funded account for $30,000. I'm also thinking about getting my feet wet with a $7,500 instant funded account Wednesday. So we'll see what happens with that, and I'll keep you posted on that. So I could be a funded trader as soon as Friday. And that would make me very happy. I'm doing what I want to do instead of what I have to do. So we'll see what happens with that. In the meantime, you guys have a great one. That's my weekly look ahead. Silver's hot, gold's hot, platinum's hot. Canadian versus the yen is hot. Dollar versus the Canadian is hot in the other direction, selling. So this might be some things to take a look at. But you guys have a great one. If you like this video, hit the thumbs up. If you want to see more of these videos, then subscribe to the channel, and you'll get messages on when I put more videos out. And lastly, if you don't know, what is it? Oh yeah, if you have any comments, by all means, please comment, and we will take everything a little bit closer. Have a great one. I'll talk to you later. Bye.